Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, if you talk about Indian equity markets, they're likely to set higher, tracking global peers, essentially the Asian markets. At this point of time, if you talk about the Asian equities, they've been trading higher. US shares hit their hottest winning streak in almost 2 years as investors cling on to the hopes that interest rate hikes have been peaked. So that's that. When it comes to the entire trade setup that we have, earnings, a couple of them will be reporting in today. But what remains essential and has been reported is the United Spirits Bata, along with few other names that we're going to be discussing in just a bit. But let's get going with stocks and strategies that need to be on your list from Chandan Taparia from Motilal Oswal. Morning there, Chandan. I'm going to straight up ask you start with asking you about the trade setup for the day. It's been a good week for Indian equity thus far ahead of running into the Muhurat trading. What do you think would be the strategy now and for Nifty as well as Bank Nifty?
Good morning, Nickey. Thanks for having me. Hope you are having a great festive time and wishing everyone happy Diwali in advance. And market is also giving some firecracker with recovering the Dow in last week, and Nifty is also making higher lows from last 6-7 trading session. So we believe the supports are likely to hold. And as of now, till it holds about 19,333, ongoing rally could extend towards 19,600 zone in the Nifty index. Talking about Bank Nifty index, the Bank Nifty also witnessed decent recovery. However, slightly underperformance, but till it holds above 43,300, banking index has potential to rally towards 44,000. So both the indices are having positive to rebound bias. Any small decline could be bought, and ongoing trend of the recovery could continue in the market ahead of the festive season.
All right, that's the word coming in. Perhaps a more strategy, Chandan, from you when it comes to the entire Bank Nifty, because that's the one that we're tracking in closely. What do you make out of it? And few stocks, select names that stand out for you as well. Just 30 seconds.
So 43,300 is support for Bank Nifty for 44,000. While sector-wise, I'll focus on the auto, consumption, gold, gems, and jewelry counter.
All right, that was less than that. It was pretty quick, but essentially we are looking at a bunch of names which are reported in the numbers. What is interesting is a hold rating, initiation of hold rating by HSBC on JSW Infra, the newly listed kid on the block. Nifty 50, it is a flat start with some amount of, let's just say it is a flat start. The momentum needs to be decided with the negative bias at this point of time. Perhaps a bit of consolidation after the gains that we've seen. Remains to be seen if we can further build on to it or witness some amount of profit booking at the higher levels. What is the narrative? It is a buy on dips or sell on rallies is the market. That's something that we'll figure out during the course of course, the week. Also, let's talk about Bank Nifty. How is that stacking up for you? Bank Nifty, we are looking at gains also coming in for that one. Well, it's losses to an extent of 0.2% by Bank Nifty index overall. And if you talk about the sectoral indices, how are they faring? Just to see how the market momentum is stacking up. Well, mid-cap index gains to an extent of 0.3%, and small-cap index, well, gains also to an extent of 0.3% thereabouts for the small-cap index. Let's talk about Nifty IT. How is that stacking up? It is a flat trend coming in for that one. PSU Bank is clearly the one that you need to watch out for, along with metal, which have thus far, pull up a good show. PSU Banks remains to be in good health. 0.2% of gains captured on that index is helping some amount of sentiment out there. Metal index is doing too well either. It is doing well rather with gains of around 0.4% thereabouts, and FMCG has witnessed some amount of selling pressure in early deals. Let's look at the top gainers and the top losers that we have for you early this morning, just to see where the momentum has stacked up. BPCL, Adani Ports are some of the gainers out there. Apollo Hospital, DRL, Adani Enterprises, these are some of the top gainers, along with Tata Motors, M&M and Wipro. In terms of what we have as top losers, let's pull that up. Top losers, we have Tata Consumer Products, HDFC Bank and Tech Mahindra, which are the top losers for the day. Bharti Airtel, Reliance and Eicher Motors, these are some of the top losers that we have. Some amount of selling pressure perhaps is being exerted by the index heavyweight old economy stocks too. HUL for that matter it's down in trade, along with Axis Bank and Sun Pharma. These are some of the top losers that we have right now. The market breadth, if you talk about markets, pretty much flat and barely few gainers out there. But I'm going to go back to Chandan and check with him, what does he make out of this start? Seems like a very indecisive start out there. What's the strategy? Does it still remain the same? And also top two recommendations from you, Chandan.
Yeah, so strategy will remain same. Positive view on market buy on decline will be the stance. Let me mention few name. I'll focus on gold and jewelry name. So Titan will be the one pick. Kalyan Jewelers can be selected in non-FNO counter. So if I talk about Kalyan Jewelers, the stock is continuously making high rise, high lows. So with support of 343, it can head towards 370 level. We are positive on the auto name. So TVS Motor will be other stock. So with support of 1610, we can see really towards 1710 in the TVS Motor. So selective auto, gold and jewelry counter will be in focus. And then you cannot forget about real estate counter, positive on the Brigade. Buy at current zone with support of 715. Brigade can head towards 760 levels.
All right, what do you make out of Bata essentially? It's reported in numbers. Of course, that's also the top line softness there for that counter continues. The margins improved on the gross margin expansion. The PAT has been impacted by the one-time expense that we've seen. How are you reading into it on chart-wise? What is the next immediate trigger level for Bata?
So like Bata, the structure was comparatively weak. It was making lower top, lower bottom on the weekly chart. But today it formed a bullish candle turning from the key zone. So once recovery could be there, it is all set to give a consolidation breakout of last 10 days. So beaten down nature, but recovery from the lows could see the move towards 1620. So one can attempt for a bounce back really with support of 1550 for a bounce towards 1620, 1640 level.
All right, let's also talk about United Spirits, right? The revenue, the top line growth has been impacted there. It's come down. It's almost actually, let's just say it's flat at 1.4%, down by 1.4%. The EBITDA is almost flat there. Margins have been at 16.4% as compared to 15.2%. Nothing sort of a results technically if you just look at the fine print. Sure, the details would be there, but in terms of just the technical levels, what you're going to suggest for United Spirits now?
Yeah, so positive view on McDowell. However, it witnessed small decline, but now the structure are changing. Stock has multiple support near 1060. With that support, it can relate to us 1110, 1120.
GNFC, Chandan, where the company has approved in a proposal to buy back of around 5.46% of shares at a price of around 770 per share for an amount of around 652 crore. Now, do bear in mind the fact that the stock is already in the FNO category. It continues to be in that for a couple of days. Your initial assessment on that one as well.
So some sort of profit booking could be there in the GNFC. Stock from top near to 705. Open gap down, selling pressure is there. So I think it can correct to our 640, 635 levels on the downside.
All right, relatively a newer name, Chandan, there for you, JSW Infra, but the also newly listed one, right? HSBC has initiated a hold rating on this one, and the target price is to an extent of 190 per share. It talks about the recent rally limits being the upside and positive, the potential catalyst being in the rise of volume ramp up and new projects. What do you make out of it? Because the forecast is of a 20% EBITDA CAGR from 23 to 26. So fundamentally looks to be a stable sort of a company. But how are you reading on for charts? Does it look like an attractive option?
So like JSW Infra recently got listed. So I have less data to read. I think technical fundamental will work better. But yes, given the scenario of last 3 days data, somehow the stock has support near to 190, 192. So technically, given the limited data, the support of 192, we can play rally towards 215 to 220 levels.
All right, Chandan, any other recommendation that you'd like to make this morning?
Yeah, I have positive on all the real estate counter. One can buy Brigade, Soba, Prestige. So Brigade already mentioned can rally by 3-5%. Prestige is another name which we like. So one can buy Prestige at current level with support of 835. It can head towards, with support of 830, it can head towards 870 level. Soba also I like for positive momentum. With support of 795, it can go to 830. So Brigade, Soba, Prestige, these are the 3 real estate counter which can do well and positive to range bound bias in the market.
All right, Chandan, we're just going to leave it at that. And thank you so much for taking out the time and speaking to us this morning. All right, let's actually navigate our discussion now to the fundamental side of the story. Ferroze Azeez, Deputy CEO for Anand Rathi Wealth, joins us this morning. Morning there, how are you doing?
Very, very good. How are you doing?
Thank you so much. Doing fine. Let's straight up ask you about your assessment. How are you playing the markets ahead of Diwali? Any themes that is in focus or any themes that you expect to be in focus for somewhat 2080? And if you're going to be stock specific, it's going to be even better.
Yes, Nickey, I think before we get to sectors and stocks, of course, I'm not qualified to comment if I refrain from going to stocks. But yeah, I think the broader market, some things which I'm reading from a market standpoint, is that the broader market is showing some signs of reversal. Every time the FII long positions or short positions cross 80% in the futures market, index futures market, there has been a trend reversal. So if you see 26th October, the FII long positions were 80, short positions were 84%, and long positions were only 16%, which implies that you were in oversold territory from an FII index position perspective, which has acted as a great proxy in terms of a short squeeze. That's what we've seen. We've seen about a 500, 600 point rally from there on. So that's been a great lead indicator to what lies ahead in the short term. And that's proved right for the last 10 consecutive times, which I have been monitoring this. That's point one. If you look at the weekly synthetics are nothing but a long position in call and a short position in put on the same strike is called a weekly synthetic. The premiums of the weekly synthetics are a great lead indicator to what is happening in short term, apart from all the technical indicators. So both these indicators say the markets are far more stable than when you speak to people. They're far more pessimistic than what the general mood in the market with these two lead indicators state. So I would not be too worried about large drawdowns. So as a long-term investor, I don't see any catastrophic falls in the market in spite of the geopolitical uncertainty. Now, when you turn light to that specific event of the geopolitical uncertainty between Israel and Palestine, I would say that this is category one as per us with respect to the impact on the market, which means that 7-8% drawdowns is the maximum possible because of any escalation into the situation we currently see. I think that's the broader market theme over the next couple of months. Then coming to elections, the state elections are going to be a reasonable barometer to the probabilities of general elections swinging in the favor of the current government. And that's a larger likelihood. And I think risk management is all about handling the smaller probabilities rather than the larger probabilities. So I think there is still a small probability that the third term may not be there, 2%, 5%, 10%. And that's the business we are in. Managing that 5-10% probability is crucial.
All right, Ferroze, I want to check with you. Well, essentially 4 triggers that you think, out of the 4 triggers that you think will have maximum bearing on the markets. First is the politics, where you're talking about the state elections, which could probably lead to the rally. Second one is the cues from the US stocks and the bond markets. Third one is the oil prices, which seems to be a little volatile right now. And the fourth one is the earning. Which amongst the 4 do you think would be the further driver, or just to say growth driver for the markets going forward? Just one of them, not all of them put together.
Yes, I think, data speaks louder than English, like I've always believed. There are very few years in the history where earning estimates are met and Nifty does not do well in that particular year. So our earning estimate for Nifty in terms of the earnings for the full financial year is about 936. We are completely in control of that as those top 50 stocks have delivered great earnings. So I personally think earnings is going to be a reasonable driver, point one. Of course, for the fact that that will not disappoint is a great cushion or a shock absorber in your car. Now, of course, geopolitical bad news, and especially the US inflation doesn't bother me because our inflation has cooled off to 5.02, which is lower than the estimates of Q3 and Q4 from RBI side.
Okay, what are the themes essentially that you have kept in focus for somewhat 2080? Do you think defense, railway will continue to be, tracked by the markets closely, or are you looking at some other pockets of strength which thus far have been undervalued?
I think pharma is something which I would definitely take a heavier weight than what it is on Nifty significantly over the next 3 years. Of course, short term, I would rather play the segment of the market than the sectors of the market. The small cap segment has outperformed. So I'm tracking that very closely with my ground team tells me that there's about 3,200 crores of small cap inflow in the last month in all the small cap funds, which is still not released by AMFI, but I think with a 5-10% tolerance, this is the number. So if the trend is that liquidity is coming on November 14th, if we have a rejig from MSCI on the index, whenever the top 10 weights perform very well, and if the index are rejigged, the top 10 get more weight, and that realizes a larger liquidity in those top 10, and the small cap performance should continue over the next 3-4 months. I would rather play that, which is a simpler and an easier predictable game from a higher probability perspective or odds perspective. I would not go into sectors currently for the 3-4 month period. From the long-term perspective, I would play pharma.
Okay, so pharma is clearly the one for you. But how about new age companies, Ferroze? Are you looking at some amount of traction building in on those one as well? Some amount of comfort, which is probably now also creeping in terms of the fundamental side of the story for all of them, be it in the likes of, not all of them, at least a few of them to say so. But Mama Earth is also the recent mix, adds to the recent mix, right, of the new age companies. How are you viewing this and what do you really like?
See, I will not get into the stock, but I personally think new age companies had no publicly business model evaluation parameter because they've been in the unlisted space for far too long. And you see a Paytm share, for example, hypothetically, if you look at buying it in the pre-IPO stage where people were buying and selling in the unlisted market, it went as high as 3,000 rupees. So what happened was there was no barometer to check the valuation methods. And I think after about a year, 2 years of loss-making companies also getting listed, I think there has been reasonable clarity of data. Like I was hearing Chandan saying that this IPO does not. This is just a recent one, so I don't have data. But I think data has emerged. So I personally think there is some degree of solidity in terms of the comfort of valuation and the technical parameters available on these stocks having been listed for some time. So I'm reasonably comfortable today because the projections of profit happening over a period have become more and more easy to predict for a person who's analyzing that business. So there could be some degree of upward correction for the uncertainty which most analysts figured after they became publicly listed companies. So net, the point I'm trying to make is these valuations seem more reasonable because there is a model to value them currently.
All right, Ferroze, we're just going to leave it at that. And thank you so much for taking out the time and joining us. And also happy Diwali from me and my entire team.
Wish you the same, Nickey, and to all your viewers as well.
All right, thank you. All right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.